stock market today analysis for Friday, January 13, 2023, 6:06 p.m. Hawaiian Standard Time. We are going to look at what I consider the general markets per the US, and then we'll take a peek at sectors, 12 sectors that make up the stock market. Before we do that, I want to invite you to check out ihavesuccess.com, which you can find a link in the description of this video, below this video for that description. And a little bit below that, there is a playlist that says Trading Options for Beginners, with beginners in all caps. When you download this cash secured put stock selection guide, 3 stocks I sell cash secured put options on. They're not the only 3, but they're 3 that I've been selling cash secured put options on for a while. They might not be suitable for you. Nonetheless, you can get an idea of some of the things I like about these. Right? And then this will give you a little bit more idea of how to select. So you use these 2 in combination with that playlist that has 5 videos. The playlist will, give you the technical jargon of, what's a cash secured put, what's a naked put, what's a covered call, what's a naked call, what are the pluses and minuses of each, la-da-da-da, stuff like that. It'll show you how to set up some charts. Not like this exactly, but some charts that will be kind of simple to get you going. And the 5th video in there will show you how to use the Yahoo Finance screener for free to screen for some decent fundamentals of stocks and show you how to find stocks in your price range. They need to be in your price range because you may or may not know this, but stock options deal with increments of 100 shares of stock. So feel free to check all that out. And then when you got an idea, a theoretical idea, the next thing I recommend that you do is, before you get into the ring and really start fighting, battling out with your money, I recommend you get some sort of paper trading. Webull, Thinkorswim, pencil and paper. It's not a website called Pencil and Paper. I literally mean pencil and paper, as archaic as it is in 2023. It doesn't matter. It doesn't really matter what how you do it, but practice. Practice without risking real money. And then there's 5 reasons. So in about 30 seconds, at 3 minutes and 30 seconds of this video, I'm going to link right up here to a video that gives 5 reasons why I think everybody should be selling cash secured put options in 2023. And that video, that link is getting ready to pop up. You don't have to watch it right now. Wait till this video is done. Come back. Yeah, there. You see it right there. No? Now you do. Boom. You saw that. 3 minutes, 30 seconds. You can come back. You can remember that. 3 minutes, 30 seconds. Come back and watch that. Basically, it's 2023. My friend, time to get with the program. The program. Get with the program. The program of selling cash secured put options on stocks that you wouldn't mind owning. And one thing that you can do once you get a little more familiar with selling cash secured put options is like what I did today, because what we're going to notice, for example, down here we have the 4 indices of the stock market. SPY, spiders, whatever, S&P 500, Dow Jones, NASDAQ, Russell 2000. See how everything was up today, right? Everything was up. Strong bull candles up. So there, this morning when I noticed that everything is up, I noticed that the VIX was going down. Hit a new monthly low at this 18.01. When I saw that, and I knew, when I saw it was Friday, I thought, Friday the 13th, I thought it was a bunch of Hollywood hoopla. I think it's a bunch of BS when they say it's an unlucky day. And that's all make-believe. Your good buddy Brent makes his own belief. And my belief is that today, Friday the 13th, option expiration date, going to be my lucky day. So what did I do? I looked at a list of stocks that I either already have shares in or I want to accumulate more shares in. And I looked at the implied volatility of these stocks. And I went through these stocks and I went to the highest implied volatility first. And I looked at that, I looked at this company and I saw, could I sell an option, could I sell a cash secured put option on this particular stock at a strike price that I'm happy to buy the stock at and that will expire today? I don't want to reveal, you know, which tickers I did, a lot of data, because I don't want it to be confused for giving out like stock recommendations and things of that nature. But I was able to do that. I was able to find one that that had some decent implied volatility, which means what it kind of means is that you get richer option premium, which means that, let's say if it was on this particular let me pull this one. If it was on this particular you know, thing, forget about the name, all right, forget about the price for a second. Let's just pretend, let's totally pretend we're just seeing this, right? So what I did is, a lot of times when there's higher implied volatility, you can potentially get some money for selling. Right here would be the money, right? Here's where it's trading. This would be called quote unquote in the money, right? Or near the money, right? It's near. Now we're going out of the money. We're going further out of the money, right? You see, as I go further away from where the stock is trading at, that's further out of the money. Same thing as you go further away this way, it's further out of the money. So when a stock has a lot of implied volatility, you could potentially sell options further away from the money. And I had to dig around a little bit. I had to go through my list. It wasn't the highest implied volatility one. I had to keep clicking on the trade tab. I had to keep looking at the option premium. I had to find one that was expiring today, because I wanted to put myself in a situation that I was going to make Friday the 13th a lucky day for me, and I did. So I sold a 1 day, right? I sold a cash secured put option that expired today. I was able to sell it on a stock that I already own shares of, but I wouldn't mind owning more, and it expired worthless. I didn't make a super big amount of money, but I made money. And for me personally, I don't care if it wasn't big bucks. And what I mean by that, right? See, that's big bucks right there. That's big bucks. I don't care. I don't care if it wasn't big bucks. I don't care if it was little bucks. I just want the bucks increasing, right? That's all. That's all I care about. Now, sometimes, of course, you know, I want some bigger bucks, but this was kind of like a, you know, just like, it just happened to be that the you know, stars were aligning. The charts were aligning on Friday the 13th. You know, I personally give the finger to Hollywood, so this is my way of giving the finger to Hollywood. You know, no one's going to brainwash me and make me think it's a bad day. I'm going to have a great day. And I have had a great day. So that's one thing that you could potentially do. So let's say without a lot of implied volatility, maybe you can get some money selling down here. All right? Well, with implied volatility, maybe I can get some money selling down here. Okay? See where that little ledge is? See that? All right? So that's the great thing about selling cash secured put options on stocks that you're comfortable owning or that you want to own. So I'm in this position where either I make you know, make some money. Was it anything that's going to change my life? No. But when I do that week after week, month after month, eventually, you know, did you ever notice that there's 100 pennies in a dollar? Have you ever noticed that? And did you ever notice that if you have a single dollar bill, there's 100 single dollar bills in one $100 bill? Did you ever notice that? And did you ever notice that in $1 million, there are 1 million single dollar bills? Did you ever notice that? Do you get my point here? Is that this stuff adds up, right? If you can't do math, if you can't add up, then I don't know what you're going to do. You can look up at the sky and scream at it and blame everything on Friday the 13th. I don't know if that works for anyone, but that is an option for you. Don't take that option, right? Just put the work in. You're probably not the type of person to look up at the sky and scream and think that everything's against you, right? You're probably the type of person to take accountability for what's going on in your life. Otherwise, you probably wouldn't be watching this. The dollar via UUP, right? It was kind of like in this range. I don't know if that's kind of like cheating. It broke out of this range. Maybe it's still sort of in this range, right? It broke out here, but it's at the bottom of this range. Dollar continues to go down. Now, one thing that is worth pondering, and maybe this would give us a little bit of our answer, because sometimes what happens is, and if you've watched these videos before, I kind of often talk about this. When you have an asset, for example, let's say a share of a company, right? Pretend it's not SPX. Just let's pretend it's a company. When you have the value of one share of company, a paper asset, when you have that going up like it was today, sometimes the share, the value of that asset is going up because the actual company is more valuable. Sometimes that happens. But sometimes what happens is the value of the company has not changed, because this stock price, that's not the value of the company. That's not the value of the company. You ever heard people say, get paid what you're worth? So some people, they feel that they're worth more than they're getting paid, right? So that's the share price. Your paycheck is the share price. The value of the company is a different thing. They say price is what you pay, value is what you get. And whoever they are, I don't quite know, but there somewhere said that. And so anyways, so sometimes what happens is the currency units that you're buying the asset in, if they're going down, that means you need more of those currency units to purchase that same asset at that same value. So right now we see the dollar going down. Now, if we saw the dollar going down and the VIX was maybe going up or kind of going sideways, then maybe we could think that it's not so much that the value of the stuff is changing. And when you look at here, you see all that going up. Let's take a look at these different stock sectors real quick. Technology. Now this is a basket of stocks, right? Up. Healthcare, up. Financials, up. Industrials, up. Basic materials, up. Communications, up. Retail, up. Macy's is constantly blowing up my email of wanting to sell me stuff for like 40 to 70% off. Is that indicative of fundamental value in retail? Or does it seem like they might be struggling? I heard they're shutting down stores. They're shutting down Macy's, closing down, and the Windward Mall on Oahu. Is that indicative of strong fundamentals? No, but for some reason, the quote-unquote retail sector moving up today, right? Real estate, moved up a little bit. They got a green candle, even though so much of a move up, dropped down from yesterday. Look at that, boom, boom. Okay, consumer staples, consumer discretionary, and energy up just a little bit. But you see the majority of these is some big bull candles up. Now, all these sectors are made up of companies. Did the value of all those companies go up? Is that why this is up higher today? No, that is not why. Macy's, the value of Macy's seems to be struggling. Right? Look around the society around you. Is it just booming? Maybe you're saying, yeah, it's booming compared to when everybody was locked down. Well, what about before everyone was locked down? It's not booming. And I tell you what, if you really are committed to convince me that it is, send me a plane ticket. I'm going to come to your place. I'm not going to buy it myself just to go there and figure out what I already know to be true. Because if I go around to and if you and I go around to all these different cities, all throughout the U.S., we're not seeing a robust economy. We're not seeing, oh, look at this, healthcare, boom. Look at this, financials, boom. You know, you got, what was it? One of these banks I just heard recently, they're warning of a potential, some sort of potential recession. Oh, you guys are a bit late to that party, huh? I mean, it's so bad that last year the government needed to change the definition of recession to avoid claiming we're in a recession. So, I mean, things are that bad that they're resorting to changing the definitions. Can you believe that? Can you imagine your you know, you have a kid. I'm borrowing this type of line of thinking from Peter Schiff. Can you imagine you have a kid and he comes home with a D, and the kid says, and you're like, that's horrible, horrible. And he says, no, Dad. They changed the grading scale. They changed the grading scale. A's are horrible now. B's, you know, A's are flunky. Now, you know, a D is like a B. Right? We had to change it because I suck so bad. Right? That's kind of what's going on. So, what's the point? What's the point with this? One is just to understand fundamental value, you know, versus stock price, right? The price of the stock isn't necessarily, isn't always an adequate representation with the overall value. And you can see that in a lot of places, right? Like, let's say a pair of shoes. Let's say a new pair of shoes come out and they're at X amount of price, and let's say you think it's a good deal, and then like 6 months later, a new shoe comes out replacing that one, and maybe the you know, the store puts that older model. It's only 6 months old. Maybe they put it on sale. Is it on sale because there's a hole in it? There's a blemish? There's something wrong with it? No, there's nothing wrong with it. You know, you can say, well, it's not the newest style. Well, I mean, if that means that the value of it is lesser, for me, I don't give two rat tails. Like, it's the same. It might look a little different, but it's gonna function the same way. My jogging shoes, whether they're not the newest style, right, or not, they're still gonna be good jogging shoes. So the price I pay for them is one thing. The value that I get from them is something else. So keep that in mind when you're dealing with this stuff. Price, value, you know, how does it all relate? But now, so we see the VIX dropping down. We see all across the board, it's like the whole stock market's going up. Almost the whole stock market's going up. Pretty much the majority of the stock market's going up. Is that because all the companies that make up the stock market have become more valuable? No. And if you think it is, I wish I was a scandalous person. I wish I had some FTX to sell you, but I don't. So just think about value and price, right? For some reason, things are moving up. It's not necessarily because all of a sudden these companies in the last week became more valuable, more profitable. Some of them are struggling, but nonetheless, it doesn't matter. It doesn't mean don't invest in the stock market. That's not what I'm saying either. What I am saying is just to be able to differentiate price, value, when, you know, value of a company, of an underlying asset, the price to purchase it at, and when the price goes up and down, why is it going up and down? It could be for a variety of reasons. It could be because the currency you're transacting in is going down. It could be the overall more money is flowing into the stock market because overall big institutions for some reason believe it's going to go up. Sometimes, have you ever heard of short covering rallies? When people short a stock like this, this is probably, I don't know if they would short this or not, but again, forget about what ticker it is, right? Just pretend it's some company. If they short it here, they make money going down. They sold at about whatever, 109. They buy it back here in order to lock in prices. Because you open a position, you close a position. So instead of thinking about buy low, sell high. I mean, you can think about that, but instead think about open a position, close a position. When you're shorting, you open a position, you sell to open, right? Sell to open, buy to close. Selling pressure can drive prices down. Buying pressure can drive prices up. Hence, short covering rally. The shorts close their position, they cover their position, which helps drive the price up. So it's just another little caveat to think about. Is it going up due to short covering rally? Is it going up due to the fundamental company, like earnings? Wow, this company is just has more money and more money and more money and more money. This company just paid off a bunch of debt. Now they have freed up their cash flow by like $500,000 a month, or whatever the case may be. You can think about that type of stuff. So we see overall the markets went up. We take a quick look at those. Let's chat a little more just about selling cash secured put options and some things. And we will continue to look at these, but we're going to pretend that these aren't futures. Oh, look at that Bitcoin. I want to point out Bitcoin really popped up. Gold is really going up. I think I told you this already, but there's multiple ways to play gold. You want to, if you want to somehow interact with gold, the first thing I would let's just go like step one, right? Physical metal. The easiest and best way to use physical metal is to think about it as insurance, financial insurance. It's not what you're going to use to get rich. It's what you're going to use to stay rich. Right? And if you want to look more into it, then just Google something or Bing something or whatever freaking search engine you like to use. Put using gold as financial insurance, using gold as a financial hedge. Search terms like that and read about it. You kind of understand. You probably get a better idea of what I'm talking about, right? So physical metal, if you're looking at trying to, if you're looking at trying to increase the quantity of your fiat currency notes, aka the dollar, aka the pound, aka the I don't know, the yuan, aka the ruble, aka whatever fiat currency you have. If you're trying to increase the number of fiat currency you have using physical metals, it's not that it's impossible, but it might not be it might give you some frustration, because from years of trying to do it, I've really just came to the realization that physical metal works really, really well as financial insurance, right? So the next thing that you could do, right? So keep that separate, right? Now, in your trading account, right? You have things like gold futures, right? This is a gold future. If you buy a gold future thinking that this paper contract is gonna put some metal into your physical possession, that may or may not come to fruition. And I don't care what you read online at like the let's say you go to whatever I forget the gold, the futures, whatever, wherever the futures exchange is, you read whatever you read on there. I don't care. You know why I don't care? Look at the FTX terms of service. You think it said we're going to steal your money? You think it said we're going to lie to you? You think it said we're going to cheat you? So please don't come back to me and say, well, look, it says right here on their website. I don't care. I'm going to make a website and I'm going to put the sky is purple. Does that mean the sky is purple just because I wrote it on a website? No. So don't be so trusting, right? And so anyways, just realize, like, when you're looking at if you're thinking about gold contracts, futures contracts, just think about increasing your fiat currency, right? That would be the simplest way. This would give you the least headache, because what if you're thinking that this gold contract, futures contract, is going to put gold into your pocket? at a discount, right? You say, let's say you had this contract at 1850. Here it is at 19. You're like, okay, you know, give me my 1,000 1,000 ounces of gold. And maybe they'll say, hey, you didn't read the fine print, and we're going to settle it in cash. Maybe they won't. I don't know, but I wouldn't look at purchasing physical metal that way. You know, I'm sure it's been done before. I'm sure someone can come back and say all this stuff, and you potentially could be right. And I think that's also could be right that there might be something written in there that they can settle in fiat currency. So, but that is a way that you can make money off the gold price with these futures contracts. With futures contracts, you know, when you buy, if you bought a share of let's say Dow Jones, right? And you bought it today at this price. You pay $343.03. Let's say that was your purchase price right there. The one major difference between a futures contract and buying a stock, let's say, is that when you pay this $303, if this goes down, right, it closed here, right? But when it goes down here, you don't have to have extra money in your account in order to keep this open. Right, you pay the price one time. Now, if the Dow Jones goes back down here and now it's trading at 330, you don't have to come up with more money in order to keep your position open. The only thing that happens is that if you sell at a loss, but you're not going to be forced to sell. When you paid the money, you got the share. Over here with the futures contracts, let's say you paid this 1923. You got to have extra money on the side called margin in order to keep that position open. If you don't have enough margin to play the game, they're closing you out, brah. That's right, they're closing you out whether you want it or not. So you got to realize playing the futures is quite a bit of a more complicated thing. So what else could you do? You could do something like GLD. You could be selling cash secured put options on GLD. Is it GDX? And there's a variety of little ETFs. Now, definitely, when it comes to this, 100%, do not think that these are going to be putting physical gold into here. Don't think you got physical gold because you bought shares here. Do not think that. No, no, no. You do not have physical gold. You ain't got no physical gold, even if you bought shares of that. You know what you got? You got an ETF that trades as a derivative off the price of this. That's what you got. And if you say, well, they got all this gold, they got all the silver in their vaults or whatever, that's great. They got it in their vaults. Well, but it says here on the website, we already went over that. We already went over that. Right? Bernie Madoff probably had some stuff on his website too, stole everybody's money, didn't they? Don't be a sucker. Don't be a sucker. Right? Just use it for what it is, right? Use it for what it is. Just like in your dating life. Don't be marrying the wrong people. Don't be a sucker. Right? Use it for what it is. Understand what it is. You don't want to use it for that? Don't do it. You're looking to accumulate physical metal, then accumulate physical metal. You're looking to trade paper that represents the price of the futures market of the physical metal. All right, then do that. Right? Just call a duck, call a pig, call a bear. Don't be thinking you're walking up to a duck when you're walking up to a bear. Just keep everything like cognizant. Be cognizant of what things are, of what their purpose is. Right? If I wanted to pick up groceries with if I had a wife and 3 kids, I wouldn't be trying to do it on a motorcycle. It's not the correct vehicle. I wouldn't be trying to buy groceries with a wife and 3 kids on a motorcycle. Why wouldn't you do that? Right? It's obvious to you, but sometimes this stuff isn't obvious. But sometimes, like, it's not obvious in the beginning, maybe. Right? So these are instruments. These are vehicles. use these vehicles for the right purpose. Don't try to pick up groceries with a wife and 3 kids on a motorcycle. Don't buy a motorcycle to do that. You're going to get frustrated. It's not going to be easy to achieve your end result. So those are some ways that you can. Oh, and then you got the miners. You got different levels of miners. If you're kind of new to this game, just stick with the big miners, and maybe maybe like the royalty and streaming companies. When you start getting into this real speculative exploration stuff like that, well, I can make big money, you get big returns. You can, but like Doug Casey says, they're burning matches, right? You got to really know how to do that. So check out the Independent Speculator, his free email, or you can pay whatever the $3,000 a year and get on the full thing. But you got to know what you're doing. You want to play in that game of those exploration companies. You got to be a little bit more crafty than the average person. I heard Robert Kiyosaki say before, what is a miner? A liar standing next to a hole with a shovel, right? So that's a joke saying like this. Just a lot of BS going on. So anyways, okay, so we talked about the gold, talked about how you could potentially play the price of gold. And here's one more thing about gold I just remembered. Now, since it's going up, sooner or later people are going to be talking about it. Sometimes what happens is that when all the hype starts, sometimes the party bloop ends. I'm not saying it's going to end. I'm not saying that. I'm just saying don't get FOMO. Don't be getting that fear of missing out. Right? Be a little more strategic. Whether you make money in gold going up, or whether you, I don't know, you make money shorting the dollar somehow, or whatever, whatever. As long as you're making money, right? Don't put yourself in a bad position over being a greedy piglet. Don't do that, right? They say bears make money, bulls make money, but pigs get slaughtered. Be patient. Be a little more patient. It doesn't mean don't take action, but have a plan. Test your plan. Realize the stock market's not going away, right? Okay, so that's and I guess another thing that you can kind of think about is you could check out UUP. And generally speaking, when UUP goes down, gold goes up, and when UUP goes up, generally speaking, gold goes down. It doesn't happen all the time, but it tends to happen kind of a lot like that. So let's get back into just kind of talking about selling cash secured put options. And when I do this, when we do this, right, none of these, right, if we're looking at a futures, we're just pretending everything are not REITs, not some sort of fancy stocks, not ETFs, just companies, right? Just regular, boring companies, right? We're just talking about regular business ownership via stocks, right? And all these companies, we're going to pretend that all of these companies, they all pay at least a 3% dividend, and they got enterprise value over EBITDA less than 10, PEG ratio like 0 to 1, maybe trading 500,000 shares or more on average per month. Free cash free cash flow. What else? I don't know. There's a variety of stuff that I'll look for. But those are some things kind of just off the top of my head. So if we're going to be selling cash secured put option on this, right? And let's just say we'll work with these numbers, but let's just pretend your account is big enough to buy 100 shares at whatever price it is. It doesn't matter. Like you got enough money to buy 100 shares of all these, right? Including this $4,000 stock, whatever, $2,000 stock, $2,000 stock. You got enough money, right? So with this one, when it's going down like this, unless for some reason, like I really want to get this price, right? And this is the other thing that we're not factoring in. When I'm really doing this, before I start doing it, I kind of take when I first start looking at a stock and I want to start accumulating a stock, I look at what price it's trading at, of course, but more importantly, I use a variety of ways of kind of figuring out what do I think the company's worth, right? I was talking about price versus value, right? Price is what you pay, value is what you get. So the price is the share price. The value is what the company's worth. If I'm getting a good deal, like let's say the value, a fair market value of this company, let's say is $15 per share. I don't want to be paying 27, right? Even 25, it seems like, well, it's a really good deal. Look how far it's fell down. It doesn't matter. It hasn't fell down far enough, right? So we're going to pretend, we got to pretend, we're not going to come up with a fictitious number for all these, but you got to realize that that's part of doing this, right? At least it is for me, that I'm doing that, right? So let's say that this is going down. Okay, now as this has been dropping down, look at all this volatility, right? Look at this big drop down right there. Look at this, boom, big drop down right there. These, see how it's kind of, you have these like gaps over here. You don't really have any gaps. You got one right here, but see, no gaps here, right? See these big gaps right there? There's a chance that's increasing the implied volatility, which means I can probably sell, if it did increase the implied volatility, I can probably sell further away and get paid some premium. And see how this has been dropping like this? You know, if I seeing this and, you know, knowing that it's just a company that you know, makes whatever widget or whatever, there's a chance it could be dropping further. So I might at 27, I might consider maybe selling, you know, selling an option maybe at, I don't know, 24, maybe at 20. You know, it kind of depends. I'm going to look more. We're only looking at 1 month of data, right? I'm going to look at 10 years of data and see what's happened. I want to keep looking to the left, look for some, you know, where did I see support and resistance in the past? But it's going to be somewhere down here, and it's going to be further away. It's not going to be like this, not going to be like this, because there's a good chance, seeing this move like that, there's a good chance it can fall down here. Now with something like this, right, this might have some, and plus it's under that 200-day moving average. Generally, like when things fall under the 200-day moving average, they have a hard, they tend to stay below it, and then when they're above it, they tend to stay above it. It doesn't mean they, you know, they can't transfer through, because look at this, right, fell below, right, but it got back up above it. But it's just knowing that that's a significant you know, thing in the stock market. So over here, what might I do? Well, let's see. So this one, we see it's going up, right? Look at these. Okay, it had a high. It had this high here in the last month. It's below that 200-day moving average. I see this sloping down, so I know it's been going down. We got this high here. Now it's approaching that. So what happened last time it got up here? Look at it, went all the way down here. So I don't want to get rambunctious and be, unless my number that I want to buy the stock at is like 104 or less. I don't necessarily want to be selling here. I want to see what's going to happen. Now there's a variety of ways I could do this, right? Let's say I don't want to buy at 104, and but I see that little pivot right there, and let's say, right, again, I do not want to buy at 104. So I could take more risk, and maybe today when I see this, oh yeah, that was yesterday, here's today, I see like the whole stock market's going up. I see overall this has been an uptrend. I see that there was this pivot here, went down, pivot, bounced up here. If I could get I could sell an option this morning, cash secured put option. I want a cash secured just in case I gotta buy it at 104. I don't really want to, but if I'm going to take in some premium, what I don't want to do is close out the position and you know, potentially lose the premium. So that's a little more risky. What might be better, like where can I sell far enough away at the price that I want to buy it at, right? Can I do that? That's probably what I'm going to be looking to do. But knowing, right, I want to keep that in mind. Now, let's say what happens, some people might start getting some FOMO. What happens if it starts going over this? Well, then maybe I sell at 104, because then it's got to, you know, come back down. There's kind of a variety of things. At some point, you know, this is a blend of art and science, and it's a lot of judgment calls. You got to be responsible enough for yourself. The default, if you want to minimize being responsible, Only sell at strike prices you are 100% happy to buy at. And if you say, well, I can't get any premium, then look at a lot of stocks and be patient. Now this one is going up. So like I'm seeing right here is our low. So here is some things that we could instantly kind of call out, right? We see prices kind of had this you know, maybe it's a little bit higher, wherever, you know, just kind of bear with me here. But right in that area, we see that prices, right? We got this kind of here. So maybe selling a little bit below here. Can you get any premium there? Right? We see how prices, see how they kind of went sideways there. That's a possibility. There's always, if this is your number that you're comfortable buying the stock at this morning, you could have potentially sold a cash secured put option. Boom, right there, right? You would have took in a lot of premium. Front would have expired worthless, and you know, you could probably sell down here. There's a variety, but you just kind of look for those things. Look where the prices start kind of seem to be forming something. Now over here, right, we see the low is right here. You could probably sell something right here, and it seems to be in this trading range, right? So out of what we're looking at, that's just kind of, that's all it's giving us, right? And again, it's like if you don't want to buy at 75 bucks or whatever this might be, you know, 72 bucks, then don't sell a strike at that strike price. If you want to buy at $65, then sell at the $65 strike price. But if you say, well, Brent, there's no premium in it, then find another stock that there's a little bit of premium in, or go out a little longer time frame so you can get some premium. But if you're like, hey, you know, I got to go out a month and a half just to get $1, it's up to you. There's definitely been times where I took in $2. I'm not kidding. There's times when I took in $100 of premium in a short amount of time. There's times that I took in $2 or $3 for like a week. So you do you. And I tell you what, you can 100% guarantee on this. I'm doing me. Right now, I have a cash secured put option open on a stock that I want to buy. It is, I'll tell you this, it's a stock that's trading around 13 bucks. I want to buy the stock. I haven't bought it yet. I've been selling cash secured put options on it for about 3 months already, and I have not got assigned once. So I'm making money from the stock without owning it. But after doing a fundamental analysis on it, I don't want to pay more than $10 a share. Now it's trading around 13. So the last time, about like a week ago, week and a half, I can't remember. The last time I sold a put option at 10 bucks, I got paid with a $10 strike price. I got paid $8. I'm taking an $8 of premium for about 2 weeks. And someone could say, well, I want to take in more money than that. Well, you do you. Like I said, you do you. I'm doing me. What do I want? I want to buy that at 10 bucks. I don't want to pay 11. I don't want to pay 10.50. I don't want to pay 12. I don't want to pay 13. I want to pay 10. And I'm a patient person. So if I can make $8 every 2 weeks, $16 a month, while I sit there and wait to buy an income producing asset at the price that I want, I'm not losing out on money. I'm making money. Maybe I could make more in a different way, but like I said, I want this asset. I'm patient. I have a big enough account where I can do things like this and other things. You know, for example, today I just sold a naked call option on a stock that I'm thinking, if everything goes according to plan, I'm probably going to make something roughly about $25. I just sold it today. I'll probably make about $25, and probably by Wednesday. You know, like if everything goes according to plan, like looking at how much the value it's deteriorating over the weekend and things like that. So whatever, $8 here, you know, 25 over there. Sometimes more. But and then the question is, how many contracts, right? How many contracts? Because I might have taken $8, and my commitment is to buy $1,000, 100 shares of stock at $10 each, $1,000. But what if you're doing that with 5,000? So what if you're buying 500 shares, right? 8 times 5 in 2 weeks, right? So it's scalable. You don't have to stick to just one thing. But what is going to be in your best interest is to start with paper trading. Paper trading. In fact, I'll link to that paper trading playlist right up here. Right, you'll see it pop up there. Start with paper trading. Once you go into real money, consider doing one contract. One contract. And then you can start scaling up. So don't be misled. Don't think, oh, I'm only making $8 on one contract. Well, then put on 50 contracts. Well, I don't have the right account size. Then get the right account size. Right? It's simple. Now, it's not easy. That's not easy. It's not easy to start with a $10,000 account and figure out how to cut your expenses, how to lower your living expenses, so you can start funneling more money into your trading account. Because you see, if I'm making like $8 on this contract, but if I were to sell, whatever 10 contracts, then I'm at $80. If I were to sell 20 contracts, I'm at $160 in 2 weeks. But I need the money in my account to do this. So where am I going to cut money at other places? Most people, they don't have the drive to cut out Netflix. They don't have the drive to stay home on a Friday night and look at how much money. Like, hey, I'm going to go out to the bar, spend $100, even though I'm going to tell myself I'm only going to have one drink. Deep down inside, I know I'm going to spend $100. I'm not just paying $8. I'm spending $100. I'm gonna lie to myself. I'm gonna pretend I'm not gonna do it. Then I'm gonna go do it anyways. And the whole time, my flipping stock account suffers. So don't be a dork like that. Figure out ways to put it, because the money is right here. The money is right here, my friend. You just got to figure out how to take it. You got to figure out what you need to do to take it. You got to understand where your risks are. You got to understand what your risk tolerance is. You got to understand what's going to fit into your life, so you can do it month after month after month. Not week after week, month after month, so you can do it year after year. That's what ends up making the difference, right? You can learn a certain amount from watching these videos. You can learn a heck of a lot more by actually doing it, right? At some point, you got to start pulling the trigger. Start with paper trading. Start trading small, and then kind of start moving up. Start calculating things. It's pretty predictable, man. You can't predict it down to the penny, but you can, after you're paper trading something for a while, you can see, okay, this contract tends to give me around somewhere between whatever, $7 to $15 for 3 weeks, or whatever it is, $7 to $15. And that is going to, I'm making a commitment to buy 100 shares of stock on that contract, and that, somewhere around whatever, 1,000 to 2,000, whatever the case may be. So if I want to do 2 shares, I need to have whatever, 2 to 4,000. Excuse me, 2 contracts. I need to have 2 to 4,000, right? I need, and you start figuring it out. Figure out how much you want to be doing, and start figuring out how much money do I need to have in my account in order to do this. So I'm covered. I'm secured, right? Because the average thing to do is I've done it before, so I'm going to talk about myself. Some Yahoo named your good buddy Brett is out selling credit spreads on a $3,000 or $2,000 stock, trying to make as much income in 1 week as possible, succeeding week after week after week after week after week. But wouldn't you know it, after like 15, 20 weeks, boom, take a big hit. Next week, boom, take a big hit. In 2 weeks, lose 75% of the value of your, in 2 weeks, roughly about 2 weeks, I lost like 75% of the value of my account by selling naked, well, I guess it wasn't naked, it was credit spreads, but selling those credit spreads where I was risking a high percentage of my account trying to make that moolah. So maybe instead of focused on how much money am I making every week, maybe focus on how much risk am I taking every week. What's my worst case scenario? If I sustained the max amount of risk that week, what's my account going to be like? How many weeks in a row or months in a row or whatever can I sustain mass loss? Because if you haven't heard this, let me tell you, you got to be able to stay in the game. If your money goes down to 0, you're out of the game. Ain't got no money? Then the only thing you can do is paper trade. But if you lose all your money, there's a good chance you won't even paper trade. If you lose all your money playing this game, there's a good chance what will happen is all of a sudden your friends, your family members, they'll be like, oh, Jeff, you've been pretty quiet about that stock market. Oh, yeah. I just been busy. You're probably not going to say, oh, yeah, what happened was I lost all my money. I didn't follow the rules that I set up for myself. I fell victim to my own greed and ignorance and arrogance. I fell victim to myself. You probably won't say that. Right? I'll never have a family conversation over Thanksgiving where someone admitted that they made mistakes due to falling victim to their own greed and stupidity. Although it's true for all of us, though, isn't it? So, anyways, a little bit different video. If you stuck around for that, I hope that was I hope that gave you. I hope it gave you something. I hope it gave you something. Oh man, you guys have a fantastic day. Aloha.